Good afternoon, everybody. This is Dan Hussey with Elliott-Wave-Forecast.com. It is currently 11:10 a.m. Central Standard Time. That's 12:10 p.m. In New York. And this is your London session recap for the live scalping or trading room. I don't think we've really decided on exactly what to call it yet. But let's go over what we did today. So for starters, into this morning on the S&P, I'm going to pull my S&P DOM off the screen now. Into this morning, we were watching the S&P hold an extension long. Extension long, you can see it highlighted purple here, was drawn from the 1758 anchor to highs. It was a 1764 half entry. I actually took the trade before the room opened. We traded at that level for probably the first hour and a half the room was open, so certainly anyone who wanted to be in that trade was able to get in. Our T1 was hit. We were taking half the trade towards the gap fill, and we're going to let the other half run to the 1773 technical targets. Gap fill was filled at a 1767 half, so we booked 3 points on the trade. Risk was at 1762s, which just was not too long ago, taken out. So I stopped out for a small one-tick gain on the whole lot. Which not bad, all things considering. I mean, it looks like we're going to break down for the rest of the day. I'm now looking and interested in being a buyer in the S&P, giving a shout out about the 1754 level. I have resting orders in to buy the S&P here at 1753, 75s. Very likely would pull the orders in at 1754s if we're trading down there. You know, just very quickly make sure you get them filled. First targets, I'm going to use equidistance from my stop. Currently my stop's is 1748 half, so roughly 5 points will be our first target. And targets on this trade will be a 1778. So I am looking to take this 15-minute now pullback that the market may do here. If we get stopped out, there's no support again until 1743s, or 1740s. And what is quite possibly a larger correction at this time. So technical upside targets from 1740 still remain above at 1790. So we're just trying to hop in on the 15-minute pullback here and what is an hourly extension long that traded at 1740s on Friday. Sure, let's call it Friday. And that's about it for the S&P in the near term. We spent a lot of time yesterday going over if you'd like to watch that video, going over the long-term ideas for the S&P and a pretty good analogous comparative study of 1970s price action with the 2000s, basically the last major recession, compared to this major recession, and it's actually quite striking when you take into account the all of the patterns and the things that have occurred and the time frames in which they've all occurred. It's been almost a complete and utter repeat. But you know, at some point here, kind of lulling over in the back of my head is that the S&P will very likely do a very large correction at some point here. If everything continues down the path of repetition and history does repeat itself sometime over the next year or two, we'll probably see a 200 to 500 point pullback in the stock market, particularly the S&P, and that will be the time to basically the last pullback, the last dip, before we finally do rally up into 1950 targets, which in the 70s were hit within 9 years of the lows. We're about halfway through that process, and after 5 years, that's when the big pullback in the S&P happened. We're not saying be sellers, not at all. The trend is up until it fails. There will be a time and a place to be a seller, but not be a bear of the S&P, and that we're just not there yet. All right, so we also took a shot at a extension short this morning on the pound. Got stopped out, took a 20 pip loss. It was a 59.05 short, ate the stop at a 59.25s. Looking for, looks like a Globex long, Globex short. I'm sure he has traded from the 159.40 area. Also seeing if 159 support picks this market up. Not touching the pound. I usually don't trade the pound, and probably won't in the future. It just I've never been that great with it for whatever reason. I've done far better with other currencies, so it has a tendency to be a lot slower and then just kind of move, and I think that's why I'm not as great with it. The euro US dollar, not much has changed. Very much sideways still. Coming off of the 134.60 level here, we did have equal legs up. Excuse me, we were unable to break through those equal legs, and now the market's pulling back. We have Globex long support at the 146.10, and full halfway back long support at the 133.86s. Unfortunately, I'll probably be sidelined on the euro US dollar here as well until we break the larger extension short that could be getting reaction here, and that's about, would be a push above 135. Then I would look to buy the pullback for a swing towards 141. Okay, but until then, downside pressure remains intact in this market, and so far it's 3 waves up, and not exactly the start of an impulse. So again, could see resistance up into the 134.70s. It's equal legs, but can't advise being a seller. Just advise being on the sidelines here for the euro US dollar. Euro Aussie, again, guys, getting that reaction off this 141 level. I'm still interested in being a buyer in this full halfway back long whenever it happens, but the trend is most definitely still up in the euro Aussie. This cross is has been holding extension longs like a champ. We got into some yesterday in the intraday signals. The trend eventually blew out of targets and has now begun new extensions here, drawn from a 136.70 anchor to highs. Support is at the 144.30s, while above a 144.10, 144.05. We will look for the market to continue to the upside, and resistance could be at the 154.40s. Again, don't advise selling up there. We're coming off of a major long at the 141s that from a daily perspective, this is such a great quick reaction. This long has upside targets of 154, and this is the third time this resistance level would have been trading, and every time a resistance or support trades, it weakens. Just be cautious. And for me, I'm a better buyer on the dips still in the euro Aussie, particularly until I see some kind of turn in the Aussie, which today might have happened. Going to the Aussie, stepping out to an hourly chart, we have equal legs down for the Aussie would be all the way down into the low 92s. This is the 93.50% halfway back long, off of the 88.48 anchor to 97.25 highs. My issue is that the 97.25 high is technically halfway back short for the year. It's not a level I would take, but it's not a level I'm totally going to ignore here. It got such a great reaction that it's a little scary to be a buyer knowing that exists there. I am, however, kind of still expecting a move up to parity here at some point, the 1.0 level, which is where the full halfway back short off of our prior 108 all-time highs in the Aussie reside, or the highs currently reside in the Aussie. So with that being the case, I want to I do want to start looking, because we are at this halfway back territory, right around 93. I do want to start watching for what we call the ambush reversal. And so what we need to, and confirmation of the swing down ending and a reversal. Right now, that swing down would actually end above a 93.25. So above a 93.25, we'd look to buy the dip. We'd be able to get long in a little micro pullback in the direction of the larger swing, and potentially be in a swing trade, just like our Euro Aussie off the 141 level, where we were able to take the 140.95 micro. Be a very similar setup. The downtrend fails its series, it confirms a reversal, and we ultimately get into a trade You could have bought the 143s, but you'd be under pressure right now. You'd be completely underwater. The market cut through that area like a knife, and until a market confirms its low, you're just catching a falling knife at this point. So I completely advise against being a buyer of the Aussie just yet. If anything, you can keep selling the extensions and keep with that trend until it fails, because that's the way the market works. It will continue. It'll stop at each station, but the train will keep going until it gets to the end of the line. And unfortunately, you don't have a map and you don't know when that end of the line is. So you wait for it to basically to pass a station and then pass it back in the reverse direction. Is the best analogy for trains I could give you. But we are looking for the Aussie to continue its 15-minute trend lower until it fails one of these extensions and gives us a reversal. If it does so while we're inside of, or getting a rally or a reaction off of a major long like this, we can confirm a reversal for a swing, and that's what we're looking for here, at least in the near term. Eric calls this type of trading Elliott wave hedging. I call it confirmation of, I don't really have a name for it. I just call it ambush reversals. But it's all kind of the same idea. We know that one swing cycle has ended. We're getting long at a entry point for a swing trade, which gives us the safety and the protection of the idea that one will be other buyers here, and two, the potential for the trade is very great. So it adds to the probability, and it gives us an actual setup to be in a swing trade. And then three, it's also an ambush reversal, which gives you a setup in a micro time frame in the same direction of that larger trend. So like I said, it gives you the ability to potentially get into a trade, which hasn't happened yet, to potentially get into a trade for a smaller risk than taking the full swing risk and still be in the same setup. They don't happen that super often, but when they do, you got to be ready for them. The Euro Aussie at 140.95 was one of them. We got 100 pips out of it, but we should have had 200 or 300 more. So, well, right now it would be 350 more. But anyway, not a big deal. Or 250 more. Either way. Not going to talk about Aussie yen today. It's doing the same thing as the Aussie US dollar. It's falling. There's less reason to be a buyer there because it looks like it might have further to fall. I'd actually rather talk about gold right now. Getting a lot of questions for gold, and I can't stress enough that if you are buying gold, you are fighting multiple degrees of trend. There is the 15-minute series of shorts here that is holding, that is traded once, twice, and now 3 times to target. So we can take these down to same anchor, new low, and resistance on gold now is is at the just on a 15-minute chart is at 124.84, as we talked about that short this morning, the 12.85s. Yeah, it got free and got a reaction down to lows. So hourly chart, you're fighting a short from the 134.40 area that has downside targets. You can see it better on the 4-hour chart. This whole swing down to the downside has downside targets at 12.10s, 12.07s. And then, of course, on the daily, you are fighting the full halfway back short for the year. Gold has a tendency every single year to pull halfway back short or halfway back long for the year. Gold pulled into its short. It unfortunately then broke the 50%, the 61.8 lines of longs, and immediately pulled into an ambush short. This ambush short has downside targets at the 12.07s. The short for the year 2013 on gold up at the 14.35s has downside targets at the 10.56s. But the reality of the very large time frame on gold is that there was actually, let's actually bring a weekly up, see how much of this chart I can get up here so you can see. There was actually a very good trend on gold. Extensions that broke out of targets, and then extension longs that eventually failed out. There was a great series of longs, a series of traditionals here, broke out, became extensions that traded once, twice, and then gold ultimately failed out of 2 extensions here. Removing some stuff so you can see those extensions it failed. It actually fully failed both on 4/15 of this year. And after that, yes, I'm not arguing the fact that gold could rally up. But if gold rallies, it's technically into a big ambush short at the 1550 level. And that is a full halfway back short that gold could take all the way down to what we call the all the way halfway back long, which is from 0 to all-time highs on gold. And it's really, at the end of the day, that same level is absolutely no different than the level the S&P traded in 2009. These markets are doing generational lows. They're bigger than we are. They are bigger than our small, site. I mean, look at this trade. Bounced off of 800, not once, but twice, and has 1950, 1960 upside targets for the S&P. Expect gold to do a very similar, it could be in a multi-year, it could be in a 10-year correction for all we know in gold. Gold could do a really, really big flat, just like the S&P, for all we know. But one thing I'm certain of is that gold is going to get down to 960 at some point. And when it does, that's when you should start thinking about and start considering, the buying that and investing in gold in the long term. But until then, the trend and the swing up off of these lows has failed, and we are in shorts. We are in a bear market in gold. I can't stress that enough. And a lot of people just don't want to listen. But look where we are. We're $600 off of highs, and falling. So there's definitely the daily setups to take us lower in the near term. Not arguing we couldn't rally back up, but if we were going to rally, it had the swing low to do it, but it got rejected, and the shorts overpowered here. I don't see 50% line holdings to the long side. I see them holding to the downside for shorts. And so being a trend trader, I have to align myself with that ideology. And right now, there's a 15-minute trend, there's an hourly trend, and a daily trend that says everything against being a buyer of gold, at least until that full halfway back long. Then invest your heart and soul into this market, because I mean, buy physical at that point. But honestly, if there is a larger, the larger levels I'd look to be a seller are 1317 and 1550. If for whatever reason we actually get up to 1550, but gold's actually speeding up to the downside. It's it's dangerous for buyers. So I just cannot stress that enough. Yes, it can rally higher in a C wave towards 1550, but I'm not the type of trader to trade the counter trend. Okay, not without at least 15-minute. Okay, we can make a case it breaks the short and then he pulls into an ambush. That's a different story, but that's not the case we have. We have shorts holding currently, and we don't have a level like we do in the Aussie where we know this is the 50 back. We're inside of a long now for a swing higher. So that's the major difference between in talking about those two markets for right now. Okay. All right, and last but not least, my orders to buy the dollar yen. So I kind of want to spend maybe 5-10 minutes going over the dollar yen. I'm going to step out to our daily. I'm going to remove some of these fibs in here. Hopefully you guys will be able to kind of see through where the orders are. But today we had one of the first times in our condensing range in the dollar yen. Today was one of the first times we've actually broken a prior high, and now we're above that high, and that level is represented by the 99.40. So it was purple. I turned it blue. Every one of these levels we pop up over, I'm turning it blue because it's broken resistance. Now that could hold as support. One of the interesting things that I'm watching is the trend lines and where they are popping in here for the dollar yen. And what I want to do is go down again to, remember, keeping all things, you know, if this is a triangle, like I believe it is, and I believe the triangle is now complete. If this is a triangle, the upside targets are at the minimum and it's typically the width of the whole triangle. Your initial A wave from the E wave puts us up at 107, 108. Okay? It's a long ways off, but that's the technical targets. Let's go down to an hourly. We had the swing that held the 97.60, 61.8 line. It was a major hold for the market, right? Major hold for longs. And then now we've had the failure of what we called the kind of reversal pivot, the 99.40s. This wasn't just to us a major break. This was to a lot of people a major break. And what we have, and what I've seen is, see this trend line coming down? It looks like we've held this trend line as support, which was obviously, you know, we had rationale for our 50% there. But we're now running into that other trend line. There's two of them. But these trend lines are important. The reason being is that they are where we're going to expect any 50% long to align with them in what we call a KYM setup. Kiss your mother. Basically, it's a nice way of saying a broken trend line being tested as now what were resistance, now is support. No different than we see these prior highs. Broken resistance, now going to be tested as support, and that's why we're looking to get long the 99.40s. Okay? It's also, let's go down to our 5-minute charts and take the whole trend up off the lows so we can see where the dollar yen is and why it's there. Full long, broke out, began extensions. Extensions trade no next in the series. We break out of these extensions. We hold the extension to high, 99.12s. We potentially broke out of those as well. And we are actually technically still holding a micro breakout there. But I'm going back to this original extension because it aligns with this 99.40 level. That's why I have pending limit orders to buy there. We have not hit the 110 upside targets from the 99.70. Really, it was a 98 buy with stops below 99.60 or 97.60. But we haven't hit the upside targets. Now there is the potential, and I can make a case for the Aussie yen making a full pullback to the 98.70s. That would be an unbelievable gift because it would be testing the trend line that we've now broken and gotten above. Testing the trend line in a pullback as a long, and it would probably be the last dip before a major rally. I just don't see it happening because of the severity and the velocity of this selling. Do you know how many sellers this move sucked in? I mean, we're talking huge amounts of sellers. I mean, let's face it. That's an incredible move. I mean, compared to, I mean, not even compared to. It's a pretty darn good move. Look at that day. That's a pretty intense move. It was the biggest move we've seen in the Aussie yen in months, and lots of sellers got sucked in, and that was just like pulling the rubber band back as far as it could. You know, really stretching it out before it could break and then releasing it. And I just don't think there's enough. There's still too much, momentum here for us to stop here without getting to the 100 targets, even if we did pull back into the 97.70s, 98.70s. But definitely could. There's nothing that says we couldn't. But we are holding extensions currently. Unfortunately, we're holding, and we chose not to buy this one. And we'll see what happens at 99.40s if we get there. I mean, it's a 15 pip difference. It could get there in a second here. But otherwise, technically 99.55s are actually holding. And that does have we do have the targets to take us up into 100 now. So hoping we get the 99.40s. I like the level. I like that it's prior resistance now being tested as support. It's our extensions that blew out, our original extension that blew out, and yeah, we could very well be witnessing the start of a major triangle breakout. We've looked at, we looked at the count before. Looked like a triangle and a triangle, and everything is still confirming that. Everything about that theory has been working. So there's no sense in stopping what our theory was or what we're thinking. We got, I have to trade this. I'm also trailing stops lower on other positions that, we had an algo day trader and an intraday position that was to the Elliott wave forecast site was the same as an intraday or a trade taken at Elliott wave forecast and on our D trader service. Both are still open over there. Yeah, this market, can't stress it enough. It's got to buy the dips here. The risk reward is massive, absolutely massive. So just kind of one trend line to get through to confirm the triangle upside, and we're right at that level. And anytime in the next 24 to 48 hours, this market could show us what it's made of. So, all right, everybody, that's all I got for you today. Going to be a pretty interesting next few. Oh, there's the euro getting a little bit of a bid. Pretty interesting next few days. See what happens in the markets here. There is definitely the potential for some dollar shorts against the euro and the Aussie US dollar that could play out. I'm watching the euro Aussie closely for a nice big pullback. But other than that, everybody, that's about it. So have a great day. And we'll be back with you as price action develops.